How one can select a good IPO?
The selection of an IPO is a very, very difficult task. You have the document, which unfortunately the investors do not read. If the investors do read this of a document, possibly they can make proper judgment call for investment. But basically, to classify and identify a good IPO is that look at the promoter's track record, look at the project for which the money is being raised, and more importantly, look at the prospects that is going to be built in for the investors. Very unfortunately, people do not read the offer document, and that's why in most of the cases they are carried away by the market rumors, and that's why they are not in a position to select a good IPO. And if you notice, all the PSU issues have been getting a reasonably good response, and this has been on account of the fact that yes, they have the confidence in these PSUs because they feel that they are more secure, safe, liquid, and they would give them at least a reasonable return from time to time. So selection of an IPO is a process by itself, and if you look at the IPO subscription that comes in, you can definitely look at the Western Belt giving the maximum because they are not risk averse. They are probably ones who take the risks onto their shoulders. When you look at the Western market, they have been contributing very high subscriptions in IPO as compared to the Southern, the Eastern and the Northern market. You will notice that all the rest of the three zones are only contributing hardly 25 and 28%. So obviously you will find in the selection of IPO, the Western Belt is going to have the greatest role to play, and they would select based on the kind of appreciation they are going to get.
How one should analyze promoters?
This is a good question because analysis of promoters ultimately is going to be the correct judgment of the company's growth. The promoter's approach, the promoter's willingness to accept change, and the promoter's capability to drive the company to newer heights is going to be the key for the success of every company. So obviously, if you are not choosing the correct promoter for investment in a company, you will end up in your investment getting lost. So the selection process will be in the following ways. Number one, the offer document contains lots of information about the promoters. Read them very carefully, and also read certain risk factors which are associated with the promoters and understand how grave are those risk factors, whether it is a commercial liability which has come across or a criminal liability which has come across, and understand the rationale of that particular risk factor that is put in. That would give you a fair idea of how the promoters are. And last but not the least, you should also make a thorough check on the balance sheet itself, because the promoter's capability of financial reporting is going to be very important. If he is paying the tax very regularly, the tax is not disproportionate to the income levels that is being shown, and there is a consistent growth path after the company's balance sheet, then obviously you can say that yes, the promoter appears to be in a good past structure where we can at least give them 75-80% mark, and obviously the investor would be selecting a reasonably a good promoter for his investment.